She is Sophia Drossos, the co-head of Global Foreign Exchange Strategy at Morgan Stanley. Sophia, great to have you join us, and how timely it is, being that the euro is going lower yet again. Okay, you changed your forecast about 2 weeks ago. Why did you get more bearish on this?
Why did we get more bearish? The big reason, Betty, that we got more bearish is because situations were moving a lot faster than what we had anticipated. So at the end of last year was when we first began to get bearish at the euro, when euro dollar was trading near 150. We, at that time, were thinking that the fiscal situation in Greece and other economies was going to be a bigger deal for the market to contend with and was going to lead the euro lower. And that proved to be correct. However, the deterioration was even worse than what we anticipated. So looking for a bit more weakness on the fiscal side in Europe was a key reason. I would also say the other reason is that we think that the U.S. economy is likely to surprise to the upside. So there could be two drivers for euro dollar going forward. The weakness of the euro-specific story, which I think the market already knows quite well.
Right.
But the surprise could be that the U.S. does a lot better, and that may help the dollar.
And I want to get back to the Europe story, but with the U.S. dollar, though, even with that jobs report we got on Friday?
That's right. Listen, I know that the jobs report was disappointing, particularly in the headline, but the underlying details suggest that we are going to continue to see private sector job growth. And right now, I think that the key issue is that the U.S. growth outlook is mispriced relative to where our economists see U.S. growth. We think that the U.S. economy can grow 3.5% this year. That doesn't appear to be in the market price when you look at U.S. assets.
Okay, so then what's your forecast then for the dollar, let's say, versus the yen and the dollar against the euro then?
Well, the dollar against the euro, we see euro dollar ending the year around 116, but we don't see the euro troughing until the middle of next year. We think euro dollar is going to get to a low of 112 before it starts to rise next year. Versus the yen, we think the dollar is going to strengthen, but perhaps not as aggressively as we previously thought. We're looking for dollar yen to end the year around 98, compared with 91 currently.
Okay, Sophia, that euro, the euro forecast that you have at 112 at the low, does that factor in, though, government support from European nations?
Government support in terms of intervention?
Right, exactly. Oh well, but does it factor? No, not intervention. Does it factor in, though, bailouts by Germany, by France? Does it factor that in, though, or what kind of a scenario does that factor in?
Well, it does factor in that there will be some kind of support, and certainly we're looking later today to get some more details on what the European authorities plan to do with their SPV that they had announced a few weeks ago. We're expecting some more details of that this week. But the key issue for me is that while some of these programs may help to stabilize the secondary markets, the question is who pays for them. And the fiscal issues obviously are in the market forefront right now. And the more spending you get in terms of support measures, the more concerned you have to be about fiscal issues more broadly in Europe going forward. And
Right.
it may not just be a peripheral issue. It may be something for the core as well.
At some point, though, Sophia, raising that question about intervention, at some point, do you expect that the G20 countries could come in to try to support the euro?
Well, the G20 countries could do it if the move becomes very disorderly. But what's been very interesting in terms of the G20 message is that so far, despite the volatility we've seen in currency markets, there haven't been any complaints about the path of the euro. And
Right.
certainly the G20 could have said something in their statement, but they chose not to.
Right, and they didn't. Yeah.
Exactly, which implies some tacit approval of the
Okay.
direction of the euro.